Good afternoon or evening, I should say. It is Thursday, February 15th, 8:20 p.m. Trying to get this video out once again, coming to you live from a Banco Santander in Boston. I'm going to be going home tomorrow, but I'll be back in Boston. They asked me to write a program. This project could take 3 to 6 months. I don't know, but I'm going to do what I need to do to get these videos out. And that will include having a printer, which I don't have on me right now, and also the location. That'll all be taken care of next week. So I'll keep it brief. Just want to get something out there. I was looking at the charts today. The 10-year 2.91. It's definitely going to 3. The yen, dollar yen, 106. It's going to 100. Okay. My friend who's in stocks, I told you once before, all he does all day is trade dollar yen. He doesn't do the trading. He's a market maker. Okay. And it's going to 100. So as the yen strengthens, okay, this is good for gold. Okay. And the dollar is just going to continue to just get crushed. Yields across the board going up. The 2-year hit a 9-year high. The spreads have come back in between 5s and 30s, a half a point, and 10s and 30s, a quarter of a point. So for an extra quarter of a point, who's gonna buy a 30-year bond for an extra quarter of a point? Does this make any sense? I don't think so. Gold had a solid day. It closed above 1340 for the first time. I expect it to close above 1340 tomorrow. I expect it to close above 1340 on Monday, although Monday is a holiday, so we'll give it that and we'll have to wait for Tuesday. All right. I want to read an article to you this morning. And I like articles like this because when I read articles like this, it tells me that the sentiment in gold is still negative. It tells me there are still a lot of gainsayers, okay, who don't believe it. It tells me there's a lot of people who are just going to put out these hit pieces, and that's fine with me. Let them do it. From here on out, gold prices will be on a downward trajectory until they hit 1100 in fourth quarter 2018. OCBC Bank said in its 2018 commodities outlook. The yellow metal should continue to fade. There's that fade again. Like Scott Nations just last Friday, I would fade gold. Okay. The yellow metal should continue to fade lower into the year as interest rates gradually rise. People, this is such propaganda. This is just as a typical hit piece. As interest rates rise, gold is going to fade. Interest rates are rising. They're going to continue to rise, and that's going to continue to make gold go up. I don't know how else to say it. It's so simple. As interest rates gradually rise amid a positive global growth backdrop. There's that growth. Let's get to growth. The Atlanta Fed, okay, just a couple of weeks ago, I showed you, they had projected GDP growth for the first quarter at 5.4. As of yesterday, February 14th, they're down to 3.2. What are they, in La La Land? You ever see that movie, La La Land? At least the actors know that they're acting, and it's not real. I think the Atlanta Fed actually believes their own nonsense. I really do. That's La La Land. We keep our outlook at 1,100 per ounce at year-end, OCBC's economist Barnabas Gann, Barnabas, Gann, Gan. Remember that name. Wrote in a report released on Wednesday. Gann based his analysis, get this, Gann based his analysis on the view that a Goldilocks economy is not a gold-loving economy. Is this guy for real? We're in a Goldilocks economy. Hyperinflation is coming, okay? Rates are rising. The dollar will be crashing, okay? The debt is unstoppable. The budget deficits are unstoppable. The trade gap, GDP is tanking. Where is this? What land does this guy live? He's another one in La La Land. A Goldilocks economy? The rosy economic outlook, tame inflation, is this guy out of his mind? Barnabas Gann? We have tame inflation and a rosy economic outlook? The rosy economic outlook, tame inflation backdrop, and potentially higher interest rates in both developed and Asian economies are persuasive factors to drag gold prices low. I don't know where they pulled this. They had to really scrape the bottom of the barrel to get this guy. Because this guy doesn't have a clue, all right? Or he knows that he was just told right ahead to his uncle. As such, we keep our gold outlook unchanged at 1,100 pounds at year end. So far, gold's 2018 rally has been driven by weaker U.S. dollar, Dan noted, adding that despite his bleak annual projections, he still sees gold prices finishing first quarter above 1,300. All right, so he expects it to go down as we get progress into the year. Such nonsense, people. That's about it. I'm going to keep it short again. Dollar 88.58, 88 handle. It's going lower, people. The VIX, absolutely no fear in this market. Okay, that's it. I'm gonna have to go to Starbucks now and upload this video. And thanks for your patience. Lord willing, we pick this up tomorrow. I'll be home, and then I want to do a detailed recap on Saturday. I think it's needful. Anyway, have a good night.